Hey folks, welcome back to the Lloyd's Coach. I'm Sean.McNiff, your host, VP of Business Development at Exceptional Risk Advisors, a cover holder for Lloyd's of London. And today we're going into part 2 of buy-sell agreements. In part 1, if you missed it, we talk about the legal aspects and why business owners put buy-sell agreements in place. Today in part 2, we're going to talk about the mechanics and the economics of what it will cost to put one of these agreements in place, the insurance costs, and then really the economics to your practice as an insurance advisor. How much commission is involved in these deals? So to get started, we're going to look at a case. This is a transaction we did a couple of years ago. It's a $15 million metal recycling business down in the South. There were 3 business owners in this case. It was a 45-year-old, a 47-year-old, and a 50-year-old, and they were all equal equity partners. So they each carried $5 million of value in the business. So they were looking to fund their buy-sell agreement to the full extent. So to start out, we're going to look at the life insurance. There are probably over 30 carriers here in the US that can fund a buy-sell agreement for death protection. Again, we're looking at putting together a policy that's going to provide the company with funds to execute their obligation to repurchase another partner's shares at death. So in this case, we have $5 million per partner. These rates are preferred non-tobacco rates. It's a major life insurance carrier here in the US. And for a 45-year-old, that's going to cost around $5,700 annually. For a 47-year-old, you're looking at around $6,800 annually. And for a 50-year-old, you're looking at around $9,000 annually. So total cost to fully fund a $15 million business at these ages is a little over $21,000 annually. Commission on this program, and these vary between carriers, is just north of $20,000 a year in year 1. These programs provide 95% commission for the first year with no trails, meaning there's no renewal commission that follows in years 2 through 20. This is a 20-year term product. So moving on, we're going to look at the disability piece of this. For traditional DI buyout here in the US, you can usually get between maybe $1.5 and $2 million of lump sum disability buyout. And we often see, as Lloyd's underwriters, the traditional markets cap out at those limits. If you want more than that, they can extend a little bit further, but usually it changes the structure and it doesn't really fit a lot of the buy-sell agreements that we're working with. So here we're looking at a $1.5 million lump sum payable after a 12-month elimination period. So cost for that coverage at 45 is a little over $6,700 per year. At 47, it's a little over $7,300 per year. And at 50, you're around $8,400 per year. So total cost for each of these partners to acquire $1.5 million of funding for the disability obligation is a little over $22,000 per year. Commission on these programs, they pay about 50% of the premium in year 1, and then they have a trail for 10 years where where the advisor will receive 5% of the premium for the next 10 years, and then it drops a little bit lower. So commission in year 1 is $11,243 for the $1.5 million per partner. And then, for years 1 through 5, if you added up that trail, and we're looking at the first 5 years in this case, you're a little over $15,700 for this piece of the planning. So moving on, to get limits above what you can get through the US disability markets, you have to go out to surplus lines markets. As a Lloyd's of London cover holder, this is something we do day in and day out. Again, we're just looking to supplement what you can get as a maximum issue limit here in the US. So you saw previously we got $1.5 million to the US carriers. We're going to simply go in and offer another $3.5 million per partner. So that gives them a total aggregate of $5 million per partner to fund the disability repurchase obligation inside of their buy-sell agreement. At 45 years old, it'll cost you around $12,000 per year for $3.5 million. At 47, you're at $13,700, and at 50, you're at $16,000. So total premium for the additional $3.5 million per partner is going to cost the firm about $41,700. Commission on the Lloyd's programs is 15% payable every single year premium is paid. So in year 1, it's $6,255. And for the 5 years combined, you're looking at just north of $25,000. So let's look at what this will cost the business to fully fund the agreement and what it's worth to your practice. So real exciting, the total all-in numbers for $15 million of funding for both death and disability. The Firm is going to pay $21,560 for the life insurance. That's $5 million on each partner for death repurchase obligations. For the U.S. disability insurance premiums, you're looking at $22,485. Again, that's $1.5 million per partner. And for the Lloyd's premium, you're at $41,700, again, for $3.5 million of additional disability buyout coverage. So all products, if they were to fully fund their buy-sell agreement, the recycling facility, that business is looking at paying around $85,745 plus taxes and fees for the Lloyd's piece. Now, that may seem like a lot of money, but again, let me say it slowly. It's a $15 million business. That cost is around half of 1% of the value of their firm. And I have to remind you, most business owners carry the bulk of their net worth inside of the private equity they own within their private firms. So to fully fund their agreement and really shore up their value, I don't think it's much to ask for $90,000 for a healthy business that has $15 million of equity. For commission payable, if you're looking at this case for the first 5 years, it's worth a little over $61,000 to your practice. So again, it's a nice case. I think it's a meaningful amount of money. It's a good amount of commission, and for advisors playing in this world, I think this is money that's hard to earn. You're working with business owners that are highly sophisticated. They're busy. You've got to break their momentum, and you've got to get them to understand how valuable this is to them. So with that, that's the overview of funding buy-sell agreements from a product and economics perspective. If you have any questions, feel free to hit me up. My contact information is always located below. We love talking about buy-sell. We love helping advisors understand the different options we can present when funding a buy-sell. This is really cookie cutter, but we do a lot of creative things as well. And beyond that, if you appreciate the content that we're putting out, feel free to hit a thumbs up on the video. Feel free to share it out with a colleague. Anything you can do to help us educate other advisors, help us educate the marketplace, we'd be so grateful. Thank you so much and have a fantastic day.